Hello, everyone. Let's start our today's discussion. I hope you all remember that in the previous class, we completed our 3 questions of June 2021 exam. Today, we will move towards question number 4, and I want you all to concentrate on it so that we can have clarity on it. Okay, you know my approach that we start every paper, we develop the answer for each of the paper so that you people can have an idea that how you have to deal with the complete exam and how you have to deal with the exam software also. Okay, let's start. You should assume that today's date is 1st December 2021. Dalkon, the managing director of Yacon Ltd, has requested advice on the tax implications of Yacon Ltd setting up a tax advantage share scheme for its employees. He also requires advice on the capital gains tax reliefs available on the sale of his house and the potential inheritance tax liabilities arising on the gift of an apartment. The following exhibits available on the left-hand side of the screen provides information relevant to the question. Yacon Limited and Dalkon, the information should be used to answer the question requirements within your chosen response. Now, you people know that this is the basic reading, and normally in this reading, we don't get too much useful things. Now, we'll start with the first exhibit, Yacon Limited and Dalkon. I want you all to concentrate on it. It is last question of June 2021 attempt. Okay. Now, let's start. Yacon Limited is a UK resident. Yacon Limited is a UK resident trading company. Is considering setting up either a company share option plan or a share incentive plan, both of which would be offered to selected employees. Yacon Limited criteria for its tax advantage share schemes. Employees will be selected to join the scheme depending on their period of employment with the company. If the scheme is a CSOP, each employee will be offered options to purchase shares worth up to £3,000 each year. Employees will exercise the options 5 years after being granted to them. If the scheme is SIP, each employee will be given free shares worth up to £3,000 each year. Employees will remove the shares from the plan after 5 years. So basically, Yacon Limited is planning to set up a share scheme. Okay, now either they want to go for a CSOP or they want to go for an SIP plan. Okay, after that, there is detail relating to Dalkon. So let's read the requirement which is relevant to this, what we have read. You should assume that today's date is 1st December. Explain Part A, explain whether or not a company share option plan and a share incentive plan will satisfy Yacon Limited criteria for tax advantage share scheme and the income tax implications for employees of acquiring the shares in each case, and this requirement is of 8 marks. So what he is asking in this requirement is that whether the CSOP or SIP will satisfy the Yacon Limited's criteria. Now, what is the Yacon Limited's criteria if you read it? The first point is that employees will be selected to join the scheme. This means that they don't want to give shares to everyone. They want to give shares to the selected employees, dependent on their period of employment. If the company is CSOP, each employee will be offered options to purchase shares worth up to 3,000. Now, you people know that in CSOP, we can issue options up till 30,000. So yes, 3,000 is within the acceptable limit. Employees will exercise the options 5 years after being granted them. That is also good to go in CSOP because 3 to 10 years is the approved limit for CSOP. If the scheme is SIP, each employee will be given free shares up to £3,000. That is also okay, because in SIP, we can give shares up to 3,600. Employees will remove the shares from the plan after 5 years. Listen to me. While I develop the answer, listen to me carefully so that you people can understand in a better manner. Okay? So, the question is Yacon Ltd and Yacon Ltd and Dalkon. Okay? We are doing this part A. So, let's start. Now, explain whether or not a company share option plan and a share incentive plan will satisfy Yacon Ltd's criteria. So first of all, I will comment on company share option plan. Please listen to me carefully so that you people can understand in a better manner. CSOP allows selected employees to be included in share plan. This means that if Yacon Ltd uses CSOP company share option plan, then it can give share options to selected employees. Number one, if you people remember the conditions of CSOP, in CSOP, it is permitted to give shares to selected employees. Okay, basically what we have to do is that we have to comment that whether the criteria of Yacon Ltd can be satisfied through relevant share plan. So the first bullet was that employees will be selected to join the scheme dependent on their period of employment. In CSOP, it is on the discretion of the employer to include employees according to his own will. It is not mandatory to include everyone. So if you read the first point, CSOP allows selected employees to be included in share plan. This means that if Yacon Ltd uses CSOP, then it can give share options to selected employees. It will be on their will. It is not necessary to include all employees. Now, CSOP allows share options up till worth of £30,000, up till worth of £30,000 per employee. Yacon Ltd can issue share options worth £3,000 under CSOP. Okay, just listen to me that how I'm doing it. Basically, what the question is that we have to comment that whether the criteria given by them can be satisfied through CSOP or not. The first criteria was that employees will be selected. So yes, in CSOP, we can do selection. The second point is that if the scheme is CSOP, each employee will be offered options to purchase shares worth up to 3,000. So yes, CSOP allows share options up till worth of £30,000 per employee. Yacon Ltd can issue share options worth £3,000 under CSOP. Okay, CSOP allows exercise period of 3 years to 10 years. Okay, Yacon Ltd can use its desired criteria of 5 years in CSOP as it is within approved limit. See, try and understand what I'm doing. Basically, I'm commenting on each of the criteria given by Yacon Limited, that whether that criteria can be satisfied through CSOP or SIP. Okay, I will repeat it again. So if someone has any query, it gets clear. Employees will be selected to join the scheme dependent on their period of employment. In CSOP, it is our choice to include any employee or exclude any employee. It is our choice. If the scheme is a CSOP, each employee will be offered options to purchase shares worth up to 3,000. That is also acceptable. Because in CSOP, we can go up till 30,000. Employees will exercise the options 5 years after being granted them. That is also okay. So what I am doing in this question is that I'm commenting that whether the desired criteria of Yacon Limited can be satisfied through CSOP, whether it can be satisfied through SIP. Okay. Now let's talk on share incentive plan. Share incentive plan, which is SIP. Okay. Now, in SIP, it is necessary to give share options to all employees. This means that Yacon Limited will not be able to give share options to selected employees only. We will not be able to give share options to selected employees only. Okay. However, it is permitted to keep an employment condition of 18 months for employees to whom share options will be granted. See, I will repeat it again. I want you all to concentrate on it so that you people can understand. What has he asked us from the question? Explain whether or not CSOP and SIP will satisfy Yacon Limited's criteria for tax advantaged scheme. Now we are commenting on the criteria. Now, what was his criteria? Employees will be selected to join the scheme dependent on their period of employment. So you have studied. Now you have to go back. You have to open the summary notes. You have to look at the approved share plan conditions. In CSOP, we can give employees to selected employees. It's permitted. But in SIP, it is necessary. It is mandatory to give share options to all employees. So in SIP, we cannot do selection, but in CSOP, we can do that. Yes, in SIP, it is permitted that we can keep an employment condition. We can keep an employment condition of up till 18 months. Like we can say that we will give share options to those employees who have completed employment up till 18 months. That is permitted. But all of the people who have completed the requirement, they must be included in the share plan. Okay. Now, let's read the second point. Now, this was for CSOP. Now, for SIP, it is if a scheme is SIP, each employee will be given free shares worth up to £3,000 each year. Now, in SIP, free shares up till worth of £3,600 per year can be given to each employee. Yacon Limited can give shares up till value of £3,000 per employee per year. So yes, that is within the approved criteria. And the last thing here was employees will remove the shares from the plan after 5 years. So yes, in SIP, we can remove the shares after 5 years. In SIP, shares can be extracted from plan after 5 years. This means that Yacon Limited desired criteria of 5 years is as per approved SIP share incentive plan. See what I am doing. I'm commenting that whether the desired criteria of Yacon Limited fits with the approved CSOP or fits with the approved SIP. And the income tax implications for the employees of acquiring the shares in each case. So let's write the income tax implications also. In CSOP, employees will be taxed in following manner. Now, what will be that manner? On grant date of shares, there will be no tax. On exercise date of shares, there will be no tax. On disposal date of shares, capital gains tax will be payable. Okay. And what about SIP? What about SIP? So what I will do is I will just rephrase it. In SIP, employees will be taxed in following manner. On grant date of shares, there will be no tax. Now in SIP, you all know that there is no exercise date. On disposal date of shares, there will be no tax. In share incentive plan, you just get free shares. You don't exercise anything. So there is grant date and there is disposal date. I will repeat everything again. I know that some people might have got confused, but believe me, how many marks? These 8 marks are very easy, very, very, very easy. Listen to me. What did he ask? Explain whether or not company share option plan and a share incentive plan will satisfy Yacon Limited's criteria for tax advantage share scheme and the income tax implications for employees of acquiring the shares in each case. Now here was the criteria of Yacon Limited. Here it was written criteria. Okay. Employees will be selected to join the scheme. Now in CSOP, we can select the employees. In CSOP, we can select the employees. But in SIP, we cannot select the employees. In SIP, we have to give shares to everyone. In CSOP, we can select the employees. In CSOP, we can select the employees. But in SIP, we cannot select the employees. So read. CSOP allows selected employees to be included in share plan. In SIP, it is necessary to give share option to all employees. Okay? But in SIP, we can put employment condition of up till 18 months. Like we can say that those who have just joined the company will not get the share plans. Now this all is written in your chapter attachments, in your summary notes. These all conditions are written. In CSOP, it's open. We can include anyone. It's on our discretion. We can do selection. In SIP, we have to include all employees. We cannot do this selected one thing. However, we can keep employment condition. CSOP has approved limit of 30,000. So yes, 3,000 is good to go. In SIP, approved limit is 3,600. So yes, 3,000 is good to go. CSOP exercise period is 3 to 10 years. So 5 years is good to go. In SIP, 5 years is acceptable. 5 years is the actual limit that you have to extract after 5 years. Now, what will be the taxation? On grant date, no tax. On exercise date, no tax. On disposal date, capital gain tax will be payable. In SIP, there is grant date when you get the free shares, but there is no exercise date. You know that, you have studied this. Because in SIP, we just get the actual shares. So on disposal date, there will be no tax. If you remember, I taught you while teaching share incentive plan that the exercise date treatment is shifted to disposal date. Since SIP is approved plan, so there will be no tax. Now this no tax should be on exercise date. But as in SIP, there is no exercise date. So this relief is shifted to disposal date. So the first requirement was to comment that whether CSOP or SIP satisfies the desired criteria of Yacon Ltd. Whether CSOP or SIP satisfies the desired criteria of Yacon Ltd. So what we did was, we picked each point of the desired criteria and we made a comment on that. First was that our desired criteria was to include selected employees. So we said that yes, in CSOP we can do the selection. But in SIP, we cannot do the selection. We have to include all employees. CSOP allows 30,000 per employee. So yes, 3,000 is good to go. SIP allows 3,600. So yes, 3,000 is good to go. Then we commented on the exercise period here and here. And then we commented on the tax implication. Believe me, these 8 marks are a piece of cake. Just pick and eat it. It's just a piece of cake. Such an easy paper, believe me. It's been a long time I've seen such an easy paper. Are you getting it? Please confirm me. Okay, let's copy this part B. And then we will read the further part of the question. In section B, we can do this, that we can read the question, we can read the requirement, and we can move forward. Because in section B, normally the question is divided in pieces. Okay? Let's do this. I hope that you people are getting it. If anyone has any query, you people can ask me on my WhatsApp. I repeat it 2 to 3 times till the time I feel that you people have got the point. If still anyone has any query, don't feel ashamed. You have my WhatsApp number. You can ask me anytime. Okay? Let's move forward. Let's look at part B. Okay. So let's read the Dalkon part, because calculate with brief explanation the private residence relief, the PPR, principal private residence relief, and letting relief, which are available to reduce the chargeable gain on Dalkon's sale of his house. Okay, so here is this Dalkon part. Dalkon was gifted an apartment by his aunt Jicama on 5th June 2019. Dalkon has never lived in this apartment. Dalkon will sell the house he currently lives in and move into this apartment on 31st December 2021. Dalkon's sale of his current house. Dalkon purchased this house on 1st July 2013 when he was employed overseas. Dalkon did not own any other property between 1st July 2013 and 4th June 2019. The sale of his house on 31st December 2021 will give rise to chargeable gain of £145,000 before any relief. Dalkon occupation of his current house. Dalkon moved to the house on 1st January 2014 on return to his UK. Dalkon has occupied the house since 1st January 2014. Apart from the period 1st July 15 to 31st December 16, when he was once again employed overseas. Dalkon resumed exclusive occupation of the house on 1st January 17, On 1st April 17, Dalkon has let the basement of the house, which comprises 25% of the property, for residential use, retaining exclusive occupation of the remaining 75% for himself. Now, what we have to do is, if you read the requirement, calculate with brief explanation the principal private residence relief PPR and letting relief, if any, which are available to reduce the chargeable gain on Dalkon's sale of house. Now, PPR, if you people remember, it is a bit complex. I would not say that it is technical. I will say that it is complex because dates normally confuse the students. Okay, listen to me. Now, what is the chargeable gain on sale of house? Chargeable gain on sale of house. So the chargeable gain on the sale of house which is given is 145,000. We are directly given with the chargeable gain. The chargeable gain on sale of house is 145,000. Now we will deduct principal private residence relief from it. Okay, we need to calculate it. We will write working 1. Okay, then we will deduct letting relief from it. If any is available, we will write working 2, and then we will get the chargeable gain. Okay, let's look at it. I want you all to concentrate. Okay, now let's calculate the principal private residence relief. Okay, please listen to me carefully. Patience and concentration is very important. What was given? The sale of the house on 31st December 2021 will give rise to chargeable gain of £145,000 before any relief. Okay, now this is the detail given in relation to the house. Now what we will do is we will make a table. We will make an analysis of different periods, that how they will be classified. Okay, just listen to me carefully. You will be able to understand what I'm trying to say. Okay, now, what is the first period in relation to the house? Can you tell me? He purchased the house on 1st July 2013 when he was employed overseas. Okay, he first moved to the house on 1st January 2014. So the first slot of time is 1st July 2013, 1st July 2013 to 1st January 2014. This is the first slot of this house. 1st July 2013 to 1st January 2014. If I'm not wrong, 1st July 2013, he purchased the house and then he moved into the house on 1st January 2014. So July, August, September, October, November, December. Now these 6 months, he purchased the house while he was employed overseas. He didn't live in the house. He didn't live in the house. Now, if you people remember, please listen to me carefully. If you people remember, the deemed period of occupation, the assumed period, is only available if there is a sandwich. Now, if you people remember the word sandwich, that there should be actual period of occupation before and actual period of occupation after. Okay, listen to me. 1st July 2013 to 1st January 2014. So I will write it here. Periods, number of months, exempt, chargeable, and one column I will add for comments. Okay, listen to me carefully. I will repeat each and everything again so your people will be able to understand it. So don't rush, just listen. Now, 1st July 2013 to 1st January 2014, these are 6 months and they will go in the column of chargeable. Deemed period of occupation will not be available as there was no actual occupation before this period. Okay, listen to me carefully. I will repeat each and everything again and again so you people will understand. If you don't get anything, just wait for some time. When we'll revise it again, it will get clear. And then also if there is any confusion, you have my WhatsApp number to ask. Now the second period starts from 1st January 2014 to Dalkon moved to the house on 1st January 2014 on return to the UK. Dalkon has occupied the house since 1st January 2014. Apart from the period from 1st July 15 to 31st December 16. So the second slot is 1st January 2014 to 1st July 2015. January 14, he occupied the house. Apart from the period from 1st July 15, so January 14 to July 15. Now, how many months? January to December is 12 months, and then January, February, March, April, May, June. So these are 18 months. They will go in column of exempt, and this was actual period of occupation. Then, from 1st July 2015 to 31st December 2016. Once again employed overseas. July 15 to 31st December 2016. So July 15 to December 15, 6 months, and then a complete year. Just a second. Okay, sorry. Okay, so 1st July 15 to 31st December 16, here it was written, what we were talking was that he once again employed overseas. So this is 18 months period, but now this will go in exempt column. Why? Deemed period of occupation will be available. Why it will be available? Why deemed period of occupation will be available? As employed overseas, and this period is supported with actual period of occupation before and after. Now, what do you mean by this actual period of occupation? See, before this deemed period, there is actual period of occupation. And if you read the question, Dalkon resumed exclusive occupation of the house on 1st January 2017. So on 1st January 2017, again, there is actual period of occupation. What you need to understand is that deemed period of occupation, is only available if it is supported by actual period before and after. Okay, let's repeat it again. What he has asked us, that he has asked us to calculate with brief explanation the private residence relief and letting relief in, if any, which are available to reduce the gain on Dalkon's sale of the house. So chargeable gain on sale of house was 145,000. We will deduct principal private residence and we'll deduct letting relief. Now we are doing working of principal private residence. First, now what we are doing is we are picking up the periods, we are picking up the slots, and then we are making a comment on that. 1st July 2013 to 1st January 14. He purchased the house. He purchased the house on 1st July 13 when he was employed overseas. Okay. Dalkon moved into the house on 1st January 14. So July 13 to January 14, 6 months. He was absent from the house. These months will be chargeable. Deemed period of occupation will not be available. Deemed period of occupation will not be available as there was no actual occupation. We need to have actual occupation before and after. We need to have actual occupation before and after. If you want to claim deemed period of occupation, you should have, if you want to claim deemed period of occupation, you should have actual occupation before and after. So here the deemed period was not in sandwich because there was no actual occupation before it. Then 1st January 14 to 1st July 15, 18 months, there was actual period of occupation. Then July 15 to 31st December 16, 18 months, these will be exempt. Deemed period of occupation will be available as employed overseas. When you do a job overseas, the entire period is included in deemed period. The only thing is that it should be supported with actual occupation before and after. Now moving to January 17. Dalkon resumed exclusive occupation of the house on 1st January 17. Now since 1st April 17, Dalkon led the basement. So there is one more slot, 1st January 17. There is one more slot, 1st January 17 to 1st April 17. To 1st April 2017. These are 3 months and they will be exempt months because there was actual period of occupation. Now from 1st April 2017, there is one issue happening. What is that issue? Since 1st April 17, Dalkon has led the basement of the house, which comprises 25%, retaining exclusive occupation of 75% for himself. So now from 1st April 17, 25% is let out and 75% is occupied. And this continues till the disposal. Now the disposal is on 31st December 2021. So 1st April 17 to 31st December 2021. 1st April 17 to 31st December 2021 when he sold this house. Okay? Now 1st April 17 to 31st December 2021, how many months will this be? So April 17 to April 18, April 19, April 20. 3 years, 18, 19, 20. Then April, May, June, July. Okay, 18, 19, 20, and 21 also. 1st April 21. So these are 4 years. And then from April till December, April, May, June, July, August, September, October, November, December. Okay, so these will be 9 months. So 4 years and 9 months. I will repeat it again. I told you at the very start that in PPR, some students get confused. In PPR, some students get confused. So don't worry about it. Okay, just listen to me carefully. You will be able to understand it. Okay, now, since 1st April 21, Dalkon has led the basement of the house. Now this will continue till the sale of the house because there is no other slot given. So we'll go till the sale. So April 17, then count April 18, April 19, April 20, April 21. So 4 years, and then April till December, it's 9 months. So 4 years and 9 months, 75% occupation and 25% let out. Okay. One last thing which you need to understand. 9 months before disposal are always included in deemed period of occupation. 9 months before disposal are always included in deemed period of occupation. You have studied it in principal private residence. So listen to me. April 17 to what date? I will write to 1st April 2021. These are 48 months and they are chargeable. Oh, sorry. These are 48 months, 25% let out, and 75% actual period of occupation. I will repeat it again, so don't worry. So 48 months into 75%, 36 will go here, and 12 will go here. And then 1st April 2021 to 31st December 2021, these 9 months will be exempt. 9 months before disposal are always deemed period of occupation. Okay, this will give us a total. Sir, please repeat it again. We have got a bit confused. No need to worry. Just listen carefully. Chargeable gain on sale of house was 145,000. First of all, we are calculating principal private residence. Okay. Now, while calculating principal private residence, we look at slots. We look at slots. Okay. We look at the slots that, and we comment on each of the slot. 1st July 30 to 1st January 14. This was the first slot. How did we find? Dalkon purchased this house on 1st July 30 when he was employed overseas. On 1st July 30, he purchased the house. On 1st July 30, he purchased the house when he was employed overseas. This means that he was not living in that house at that point of time. Dalkon moved into the house on 1st January 14. So these were the initial 6 months. The first slot. See, 1st July 13 to 1st January 14, 6 months. Simply they will go in the column of chargeable. Deemed period of occupation will not be available as there was no actual occupation before this period. If you need deemed period of occupation, you need to make a sandwich. Before and after there should be actual occupation. Before and after there should be actual occupation. Deemed period of occupation will not be available as there was no actual occupation before it. He was simply absent and he purchased the house while he was employed overseas. Now the second slot was 1st January 14 to 1st July 15. This was a slot of 18 months where he lived in this house. Dalkon moved into the house on 1st January 14 on his return to UK. Dalkon occupied the house since 1st January 14. Apart from the period July 15 to December 16, when he was once again employed overseas. So 1st January 14 to July 15, 18 months. And then July 15 to December 16. These 18 months will be deemed period of occupation. Why they will be deemed period of occupation? Why they will be deemed period of occupation? As he was employed overseas. And this period is supported with actual period before and after. There is actual occupation here and there is actual occupation here. So the sandwich is made. Then January 17 to April 17, resume the occupation on January 17. And then April 17, the let out issue started. So January 17 to April 17, 3 months actual period. Then from April 17, the let out situation has started. 25% is let out and 75% is occupied. Now this must have continued till the disposal, and the disposal is in December 21. The disposal is in December 21. The new apartment which he has got, he will live in that apartment from 31st December 21. So don't get worried about it. It is after the disposal of the current one. Now, what we will do is that first we picked out the slot of last 9 months because last 9 months are always exempted. They are put in exempted. Now 31st December 21, go back 9 months. December, November, October, September, August, July, June, March, April. Go back 9 months, the previous 9 months. They are always exempted. And the remaining period, 25% let out and 75% actual occupation. So let's look at this column of total 6 plus 18 plus 18 plus 3 plus 17, 18, 19, April 18, 19, 20, 21. Just a minute, 4 years into 40. 6 plus 18 plus 18 plus 3 plus 48 plus 9. So the total is 102 months. Exempt are 18, 18, 3, 36, and 9. So 84 is exempt, 6 and 12 is chargeable, 18. 84 plus 18. Okay. Now, what will be the principal private residence? PPR is equal to, the chargeable gain is 145,000. The chargeable gain was 145,000 divided by 102 months multiplied by 84 months. So 145,000 divided by 102 multiplied by 84. So it's 119,411. So this is our PPR, 119,411. Let's say 412. So this is the principal private residence. Now let's look at letting relief. Letting relief is lower of three things. Number one, gain attributable to chargeable letting months. Now, what was our chargeable letting months? These were the chargeable letting months. These were chargeable, but in this period, there was no letting. Chargeable letting months were 12. Okay? Listen to me with patience so you will be able to understand. I will repeat each and everything again. 145,000 was the total gain divided by 102 months multiplied by 12 months. The chargeable letting months only. 145 divided by 102 multiplied by 12. So it's 17059. Number two is 40,000 pounds fixed. And number three is PPR amount. 119,412. So obviously lower off will be 17059. I will repeat the things again, so don't worry. Just listen to me carefully. 412 and 17059. So chargeable now is 8529. Let's repeat it again. Look at it very carefully. It was a requirement for how many marks? It was for 7 marks. Now, if you listen to me carefully, this question seems difficult. Maybe it seems complex to you, but this requirement is so basic that even a student of basic taxation, F6 student, can also do this. Okay? Because PPR it should not be considered as a difficult concept at advanced tax level because it is not one. Yes, because there are complex dates involved, so sometimes students get confused. But still, it is not a concept in which you should feel that it is technical. Chargeable gain on sale of house is 145,000. First, we have to find principal private residence. While we are doing principal private residence, we make slots. And we comment on them. July 13 to January 14, number of months, 6. They were chargeable because he was absent from the property. He was doing job overseas. Deemed period was also not available because there was no sandwich of actual period. Then January 14 to July 15, 18 months. They were exempt because there was actual period of occupation. Then July 15 to December 16, 18 months. These were also exempt because deemed period of occupation was available. He was employed overseas. It is included in deemed relief. and it was supported with actual period before and after. Then these 3 months were exempt because there was actual period. Then the 4 years, 48 months, April 17 to April 21, 18, 19, 20, 21, 4 years, 25% let out and 75% occupation. 75, 25. Last 9 months are always exempted. This is the total. Principal private residence gain divided by total months multiplied by exempt months. And then there is letting relief, gain attributable to chargeable letting months. We need to look at the letting months. These were the letting months. These were the letting months, chargeable letting months. So 145,000 was the gain divided by 102 total, and 12 months were chargeable letting months. The 40,000 is the maximum limit for letting relief. You have studied it, and the PPR amount. Letting relief is lower of 3 things. We have already studied it. I hope that it's clear. Maybe some students feel that it is difficult, but what I'm saying is that for advanced tax level, PPR should not be considered as a difficult concept. Yes, because of that, sometimes students get confused, but in advanced tax level, it is not a technical concept. It is some basic piece of working. Okay, so part A was commentary on share plans. Part B was on PPR. Let's move to last part, which is of 5 marks. This is also very, 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 very easy. Let me paste it here and then we will read it. Explain the inheritance tax implication of Jicama's gift of apartment to Dalkon on 5th June 2019. If Jicama were to die in December 2024. Now let's read about this gift of apartment. It is written here. When Jicama gifted the apartment to Dalkon on 5th June 2019, it was on condition of her continuing to live in the property for the foreseeable future. This is gift with reservation. Once you have gifted the property, you cannot keep any condition. This is gift with reservation. On 12th March 2021, Jicama began living with her sister and she removed the condition she had previously imposed on the gift from that date. So the gift will be from the date Jicama removed the condition. The gift will be from the date Jicama removed the condition. Now listen to me. Jicama's just a second. Jicama's gift of apartment on 5th June 2019 will be regarded as a gift with reservation at time of gift. It will be regarded as a gift with reservation. Jicama gifted it with a condition that she will continue to use it. Okay? It will not be regarded as a lifetime gift at that time. It will not be regarded as a lifetime gift at that time. Okay? IHT on this gift will be assessed on the date Jicama removed condition. IHT on this gift will be assessed on the date Jicama removed condition of her continued use. Okay? If you read it again, when Jicama gifted the apartment to Dalkon on 5th June 2019, it was on condition of her continuing to live in the property for the foreseeable future. On 12th March 2021, Jicama began living with her sister and she removed the condition. Jicama removed condition of living in the apartment on, what was the date? 12th March 2021. On 12th March 2021. Therefore, it will be treated as a lifetime gift from that date. On lifetime gifts, on lifetime gift to an individual, I would say, as this gift was to an individual, therefore, there will be no lifetime tax on it because it will be regarded as potentially exempt transfer. Now, if Jicama were to die in December 24, then what will happen? Death tax will be assessed on Jicama's death in December 24 as gift date of 12th March 2021 lies within 7 years of death. IHT will be assessed at 40% after adjustment of nil rate band. Now, we are not given with the data that what is the nil rate band and what were the other transfers done by her. There was no value of the apartment also. So we just need to comment theoretically. Okay. Paper relief will not be available, or will it be available? The gift is considered from March 21. So counted March 22, March 23, March 24. Just 3 years are done. So it will be available. Paper relief will be available at 20%. Will be available at 20% as gap between gift date and death date is of 3 to 4 years. I will repeat it again. These 5 marks were again a very easy piece of cake. If you read it, when Jicama gifted the apartment to Dalkon on 5th June 2019, it was on a condition of her continuing to live in the property for foreseeable future. So there was gift with reservation. It was a gift with reservation. Okay, it will not be regarded as a lifetime gift at that time. It will be assessed from the date Jicama removed the condition. And if the Jicama would not have removed the condition, it will be treated as a death gift. Jicama removed condition of living in the apartment on 12th March 21. Therefore, it will be treated as a lifetime gift from that date. As this gift was to an individual, there will be no lifetime tax. Death tax will be assessed in December 2024 as the gift date. Now, gift date is March 21. Gift date is March 21, not of 2019. Okay. IST will be assessed at 40%. We are not given with any values. And finally, paper relief will be available at 20% because the gap between 12th March 21 and 31st December 2024. If I write it in bracket for the students, 21 to December 2024. So the gift is from the date we removed the condition. I hope that it's clear. That was a very easy one. Okay, how many marks? 5 easy cash marks just to eat them. Okay, let's review the answer one last time. And let me export the file also for you people so that you people don't have to copy it. Okay, now, so the first part was on share plans. We have to comment. We have to comment that whether the share plans meet the desired criteria of Yacon Ltd. That was very easy. Then there was some principal private residence that was a bit a complex one. Again, I would say that it was not a tricky one. It was a bit complex because the dates in PPR usually confuse the students. And then the last part was very easy. It was very easy. There was a condition on the occupation, on the gift. So it was gift with reservation. The date she removed the condition, it will be considered as a lifetime gift from that date. Death tax will be assessed and we commented on taper relief. So this is all with the June 2021 exam paper. We did all 4 papers. I try my best to go in as much detail as I can. I give revision also. But still, if you have any query, you people can ask me. You all have my WhatsApp number. Okay, you can ask me, feel free. Okay, but I hope that there will be no query because in my opinion, I have gone in as much detail as I can. So from the next class, we'll move towards one more paper. We'll continue doing these series of papers. We'll do 7, 8, 10 paper, whatever we can, and we'll continue doing that. Okay. Thank you, everyone.